Hi friends, good evening. Welcome everyone on today's session on job work under GST. Before starting the session, would like to acknowledge the effort of Gracelyn for making this presentation ready. The legends used in the presentation pretty similar to what we have seen earlier. E-way bill would be the electronic way bill. POB would refer to place of business. TO would stand for turnover. Schema for the evening: introduction, relevant definitions, supply of job work services, registration requirements, applicability and procedure, particulars of Challan, supply of goods directly from job workers' premises, time limit to hold the goods, taxability in case goods are held beyond stipulated time, ITC, transitional provisions, and the GST rates for job work services. So let's get started, friends. Job work includes again any outsourced activities that may or may not culminate into manufacture. So it is not mandatory that the activity should culminate or should result into manufacture of an article or a good. It can be anything for which uh, any process which has been outsourced to a third party. Under GST laws, procedural concessions have been brought to job workers. If you see, friends, their quantum or the scale of operation would be relatively low as compared to the normal dealers or normal manufacturers. So there are some procedural concessions available for job workers, or kind of a reverse charge scenario is applicable, wherein job workers are involved. What are these? Let us see, friends. Relevant definitions: place of business, meaning business which where is ordinarily carried on, which will also include place of storage, a person where a taxable person maintains his books of accounts, or a place where a taxable person is engaged in the business through an agent. So all these places would be regarded as place of business. Capital goods, goods whose value is capitalized in the books of accounts and not debited to the profit and loss account. Inputs, goods other than capital goods used or intended to be used in the course of business. For the purpose of job work, input includes intermediate goods arising from any treatment or process carried out on the inputs by the principal or the job worker. So, apart from what capital goods, whatever is being sent to the job worker on account of job work is regarded as inputs. Supply of job work services. Job work means processing of inputs or semi-finished goods for further processing. The job worker as a supplier of services is liable to pay GST only if at all is liable to be registered. So registration requirements, it is 10 lakh and 20 lakh. 10 lakh in case of special category states, which are Arunachal Pradesh, Assam, Himachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Mizoram, Tripura, Manipur, and Nagaland. So if a job worker is in these states, then 10 lakh would be the criteria for his registration. If not, it is 20 lakhs. So up to 20 lakhs, whatever job work services are being provided by job worker would be exempt. Over and above that would be taxable. The value of services would include service charges from the job work and also value of goods. So in case while providing any services, if certain goods are used by, or goods or services are used by the job worker, and those are being added or required by the, those are being added as the value in terms of invoice which is being raised for the purpose of job work services, that would be uh, 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 added in the value of services. However, the value of molds, dies, jigs, and fixtures not to be included. So whatever is the value of molds or dies, jigs, and fixtures which is being used by the job worker, that would get excluded in while calculating the value of services. It can be included if its value has been factored in the price for the supply of such services. So primarily excluded, but in case if its value is factored in the supplier services, then it can be added. Registration requirements, as we have seen, friends, up to 10 and special category stage, exceeding 20 lakhs for the apart from the special category stage. Supply of goods directly from the premise of job registered job worker. Say, for example, the principal would supply goods at from the job worker premise directly to its third party. That would be regarded as supply by the principal and not the job worker. Job worker is just acting at the discretion of principal, so that would be considered supply of principal and not the job worker. Procedures relating to job work. Provisions of this section shall apply to a registered principal who sends goods for job work. A registered person can send inputs or capital goods, as we have seen. Either it can be capital goods or inputs to a job worker, and from there to another job worker, and bring back such goods after completion of work. So, prima facie, whatever goods being sent on job work basis, if from that one person's premise it is being transferred to another job worker, and after that brought back to the factory or premises of the principal, or if it's a single involvement of a single job worker, from one job worker directly brought back to the factory premises of the principal, the entire flow of goods would be without any tax. So there would be only there won't be any tax on the movements of goods which are being transferred from principal to job worker, and again from job worker to principal. Inputs capital goods has to be sent under cover of for exemption, or I would say for no payment of tax. It has to be sent under the cover of challan, uh, which has to be issued by the principal. The principal should prepare challan in triplicate, and two copies needs to be given to job worker. And once the job work is done, one copy of that challan along with the goods needs to be returned to the principal. Again, whenever goods are being sent for the purpose of job work, principal has to intimate in form GST ITC 04. So that form needs to be filed by the principal of what all goods are being sent on a job work basis. Particulars of challan, what things or what particulars needs to be mentioned in the challan: the date and number of the challan, name and address and GST of the consignor if registered, name and address and GST of the consignee if it's registered, HSN code and description of goods, quantity, taxable value, tax rate and tax amount, place of supply in case of interstate movement, and the signature and verification part. Goods sent directly by supplier to job worker. Goods may move from the place of business of supplier to the place of business of job worker with a copy of invoice issued in the name of principal along with the name and address of the job worker. So, in case goods are being supplied from supplier, that is to the place of business of job worker, it can move along with the copy of invoice issued in the name of principal. So, say for example, principal has to purchase something from one supplier, that can be directly given by supplier to the job worker, and it would be issued in the name of principal. So it is possible where a case when a job work can directly send goods to the customers of principal, supplier of principal also can send directly the goods to the job worker for the purpose of job work. In case of import of goods, it has to be accompanied along with the copy of bill of entry. So when say for example, if the supplier directly sends to the place of business of job worker, or in case of imports, the custom stations directly send those goods to the job worker. Subsequent to job worker receiving those goods, the principal shall issue the challan. So, as the goods are not directly coming to the principal and are directly routing it to the job worker, in such a scenario, principal shall then issue the challan and send it to the job worker. Supply of goods directly from job workers' premises, as we have seen, direct supply to job workers' place of business is possible. In the similar fashion, from job workers' premises, it would be possible. Supply of goods can be made with or without payment of tax. With payment of tax only if at all it is a non-export scenario. In case it's an export, there won't be any tax. Obviously, there is a requirement of LUT or bond which needs to be issued by the principal. Again, in such a scenario, for this, for direct supply from job worker premises, the main principal has to consider the job worker's premises as his additional place of business, and that has to be mentioned in the registration certificate. If that is not there, he cannot make a direct supply from job worker's premises. Supply of goods will be regarded as supply of principal and not by the job worker, as we have seen earlier also, friends. Time limit to hold goods sent by the principal. Input capital goods. So whatever goods are being sent by principal to the job worker, there is a time limit for capital goods, 3 years, up to which the goods can remain in the premise of job worker. Inputs can remain up to 1 year. In case of genuine circumstances and sufficient causes, 2 additional year and 1 additional year for capital goods and inputs, as the case may be. The provision of return of goods is not applicable in case of mold, dies, jigs, and fixtures or tools supplied by the principal to the job worker. So, these tools and jigs and fixtures which are required for the purpose of doing the job work, that for that the time limit is not applicable. The responsibility for sending the goods for job work as well as bringing back or supplying to customers shall be on the principals. It would be the responsibility shall rest with the principal and not with the job worker in terms of getting the goods and delivering the goods to the customers. What shall happen if the goods are the processed goods are held beyond the stipulated time? So if goods are not returned back within the stipulated time, it shall be treated as deemed surplus. So, for example, if the due date was 31st of March and still till that time it has not been returned, say till 15th of April it was not, it was returned only on 15th of April. So till that time, till 15th of April, it would be considered as deemed supply of goods from principal to job worker. So if goods are not returned back, there will be a deemed sale considered from principal to job worker from the day it was sent for job work. So as and when the time limit is exceeded, there would be an implication in terms of principal selling goods to job worker and GST would be levied. In case goods were directly sent to job worker from the supplier, say for example, if principal had not sent that and it was directly sent from the supplier, date of deemed supply shall be the date of receipt of such goods by the job worker. So in case principal directly selling principal giving goods to job worker not returned back within stipulated time, deemed supply from the day it was sent for job work. In case supplier sending goods to job worker, deemed supply from the date of receipt of such goods by the job worker. Principal would be liable to tax along with interest. So in such a scenario, principal would be liable to tax along with interest. So till the time the goods are not returned from job worker to principal, principal would be liable to tax along with interest, as the case may be. Principal should declare such supplies. So as it would be a normal sale for principal, it should get declared in GSTR1. Subsequent return of goods after the stipulated time. So say for example, what happens after 15th? So on or after 15th April, that would be regarded as separate supply of the registered job worker to the principal, and job worker is liable to pay GST fees registered. So friends, we'll see in the form of illustrations also. Supply of job work services from job worker to principal would be taxable or not taxable considering the threshold of 10 lakhs or 20 lakhs, as the case may be. But having said that, if there are goods which are returned after the stipulated time, those would be regarded as shall be treated as separate supply of the registered job worker. So in such a scenario, when goods are sent after the stipulated time, that would be regarded as a sale. So it would be a reverse sale kind of transaction from the place of job worker to the principal, and job worker would be liable to GST if he is registered. That would get added to the service value. So we'll see this in the form of example. We have formulated three scenarios, friends. Scenario one: supplier of notebooks for school sends the paper of required dimension and GSM to a job worker for making the notebooks as per the design given by him. However, the government changes the specifications of notebooks, and again there is a second supply being made. But at the time of second supply being made, the principal instructs to the job worker that Keep the old supply with you till the time a buyer is found. The new notebooks are easily sold, and the paper and semi-finished goods of the old design lie in the godown of the job worker for over a year. Considering these are not capital goods and normal inputs, eh, they are still there with the job worker for period over a year. Considering no genuine circumstances, the time limit would still remain for 1 year. The threshold will remain of 1 year. In such a scenario, sending of paper by the notebook supplier to the job worker in the first lot will be deemed as supply from the date on which it was sent to the job worker. Hence, text. So, whatever supply of first lot which was made from the principal to the job worker, that would be considered as deemed supply, and principal shall be liable to pay tax on such supply. Scenario 2, a supplier sends steel directly to a job worker for hull construction. Hull is a watertight body of a ship or a boat. Upon issue of invoice in the name of principal engaged in shipbuilding, due to a natural calamity, the work was halted for more than a year. The capital goods laid at the place of business of the job worker for over 3 years were returned to the principal after the stipulated time. Here, the supplier still to job would be treated as deemed supply by the principal to the job worker, as the capital goods are not being given back to the principal after 3 years. That would be regarded as deemed supply. The date of supply shall be from the date in which, as it is given by directly by supplier to the job worker, the date of supply shall be considered from the date on which the goods or such capital goods are received by the job worker. Principal would be liable to pay tax along with interest till the goods capital goods are returned. And upon after the stipulated time, say once the good capital goods are returned, the capital goods return shall be considered as the fresh supply on which GST to be paid by the job worker if registered. As again, as we have seen, could be added in the value of success. If at all it's a registered job worker, he will be liable to charge liable to that GST on the service which he provides. Along with that service component, this would be getting added, and if he is not registered, GST would be levied only on goods. So he has to pay tax only on goods and not on the service part. A hull is the watertight, as we have seen. Yes, in such a scenario, as there were some genuine circumstances, natural calamity can be considered as genuine circumstances. The principal can seek extension of time not exceeding 1 year to the commissioner. So, one more year can be given in terms of 1 year or 2 year, as the case may be, can be given in case there are genuine circumstances. An application needs to be made to the principal commissioner. Illustration 3, Mr. Y, a registered person engaged in construction building, sends cement or molds to a job worker to make bricks. The job worker completes the work and sends the bricks within the stipulated time but does not return the molds. After 4 years, the departmental audit team that visited the job worker noticed the mold and traced it to principal Mr. Y. GST was demanded from Mr. Y for taking ITC without receiving the mold back. Analysis, as we have seen, timelines of giving back the goods shall not apply in case of mold, fixed dies or fixtures. Um, Thus, in such a scenario, no ITC can be reversed for Mr. Y, and whatever was done by Mr. Y and his job worker was correct. Other provision, responsibility for keeping accounts of inputs and capital goods lies with the principal. Waste and scrap generated at the premises of the job worker may be supplied directly by the registered job worker from his place of business on payment of tax, or may be cleared by the principal if the job worker is not registered. So whatever scrap or waste is being generated, if job worker is registered, he can do a separate sale of that waste and scrap on which GST would be levied. If not, then it would be cleared by the principal. If goods are sent in piecemeal quantities by a job worker to another job worker or to a principal, a fresh challan to be issued. So, if at all the for say suppose if one goods it has been sent in four parts or four tranches, then in such a scenario, fresh challan shall be required for each of the tranche. E-way bill shall be generated. So, in case of interstate movements of goods from principal to job worker, irrespective of the value of consignment, e-way bill shall be required to be generated. ITC on inputs and capital goods sent for job work and transitional provisions. So, first we'll see credit on ITC on goods sent for job work. Principal is allowed. So whatever uh, goods which are being sent, inputs or capital goods, as the case may be, for the purpose of job work, ITC can be availed by a principal. Credit can be taken even if the goods were sent directly to job worker without being first brought. So as we have seen from suppliers premise directly, it goes to job worker premise. In such a scenario, credit shall be taken. Job worker is also eligible to avail ITC on inputs, etc., used by him in supplying the job work services if he is registered and GST needs to be paid. So, for example, if a job worker is registered and for whatever supply of job work services GST is leviable, he can take credit of ITC for whatever inputs he has received for providing that kind of services to the principal. On failing to return the goods within the stipulated time, the goods shall be deemed to have been supplied to the jobber from the date they were sent by the principal. Applicable tax and interest shall be payable by the principal. This we have seen, friends, how this will work. Transitional provisions. What if the goods which were sent for the purpose of job work before the appointed date, that is 1st of July 2017, when GST came into effect in India. So where the goods were sent under the provisions of Central Excise for the purpose of further processing, what will happen? Inputs, partially processed inputs sent to job worker for process, tax shall not be payable in if such goods are returned within 6 months from the appointed day. This period may be extended to another 2 months, so 6 plus to 8 months. If the goods are sent back, no tax shall be levied. Manufactured excisable goods were removed without payment of duty for carrying out tests or any other process not amounting to manufacture. Again, same scenario, 6 plus 2 months. If returned within 6 or 8 months, no tax shall be levied. Declaration needs to be given during the transitional period. Both the manufacturer and the job worker have to declare details of such goods received. Declaration shall be made in form GST Tran 1 within 90 days from introduction of GST. So this may not be relevant as of now because we are like 2 years from the introduction. 2 to 3 years have been passed, so may not be relevant. But still, if goods are not returned within the prescribed time, ITC availed on such goods will be liable to be recovered. In case we are not sending goods within 6 months or 2 months or additional 2 months, ITC shall be reversed or recovered. GST rates on job work services. So as and when GST is liable to be charged on job work services by the job worker, the rate shall be as follows. For job work relating to printing of newspaper, textile, precious or semi-precious stones other than diamond, books, journal and periodicals, printing of all goods falling under Chapter 48 and 49. 48 and 49 refers to a paper, paperboard, article of paper pulp, so all items relating to paper. Processing of hide, skin, and leather, manufacture of leather goods or footwear, all food and food products, manufacture of clay bricks, manufacture of handicraft goods, 2.5%. Services by way of job in relation to manufacture of umbrella, printing of all goods falling under 48 to 14, which attracts CGST at 6%, it would be 6. So under 48 and 14, whatever goods which are charged at 2.5% or nil, it would be 2.5%. The job work service charge rate would be 2.5%. If at 6%, the job work service charge rate would be 6%. Services by way of job work in relation to diamonds, 0.75. Services in relation to bus body building, 9%. Services by way of any treatment process or goods belonging to another person in relation to printing of all goods under Chapter 48 or 49. So in case for items which are falling under 48 to 48 or 49, if there are services which are provided by treatment or process on goods belonging to another person, so any process is done on the third party goods, in such a scenario it would be 6%. Tailoring services, it would be 2.5%. Manufacturing services on physical inputs owned by others other than those mentioned earlier, 9%. Carrying out intermediate production process at job work in relation to cultivation of plants and rearing of all life forms of animals except rearing of horse for food, fiber fuel or other similar products or agricultural products, it would be nil. Any other services by way of job work, 6%. So if it is not falling within the services mentioned here, it would be 6%. So these were some of the thoughts, friends, on the job work under GST. Any questions would be happy to answer. Thank you, friends.